Hey guys, Tommy here. Wanted to make a quick market update video for you guys on what's going on. As always, this video is not investment advice, it's just my perspective, so do your own research, make your own decisions on anything you do here. So that being said, I would say it's pretty clear now we are in a bear market. And this is kind of the market crash I was talking about, right? We go in these bubbles and then we crash. We had a pretty severe crash yesterday, going as low as a 77 billion market cap from the highs of 115 billion. And on that note, as typically happens, it's the altcoins, especially the smaller altcoins, that get hit really hard by this. Some of the notable ones to me are ones that I like, but it's unfortunate. Like Ardor peaked at 30 cents, is now at 10 cents. Same with Ubik, peaked at around 270, is now around $1. So those actually went as low as about a third of their price. So I'll talk about those a little more in the future. Some cryptocurrencies got hit harder too, but anyway, I will mention cryptocurrency bubbles are typically not like a lot of other bubbles. A lot of other bubbles just go back to the ground, but I'd say the major cryptocurrencies in a cryptocurrency bubble, which would typically be Bitcoin, but I'd say now applies to Ethereum too, is they typically stabilize around half of what they peaked at. So let's just show this to you. So Ethereum peaked at around $400 in this bubble. You can see, I don't know if it's going to show 400, but it did peak around 400. We are currently around 200. So as I said in one of my tweets recently, most of the damage is done, and that is especially the case for these stronger cryptocurrencies. I want to mention too that we really didn't go as high in this bubble as we could have. We went to 115 billion, but I feel like we could have gone to 200 or 300 billion. And just to kind of expand on that, here's an updated chart by Tralalalo. I don't know how to say his name. This is the total market cap of all cryptocurrencies on a logarithmic regression chart. And this is the pattern that I see that cryptocurrencies are typically taking in their growth pattern. So just to show you guys here, look at 2013. In early 2013, in the spring bubble, we peaked at almost 300% fair value. And in late 2013, we peaked at over 1,000% over the fair value. And then, of course, we went down to the points where it was really cheap in 2015, even 2016. In this bubble, we only went to being 84% above the logarithmic regression line. So that's why I'm saying I don't feel like we went that high in this bubble. We definitely had the potential to go higher, so I feel like it was a bit of an early end. But nonetheless, what happened was this bull run just got exhausted, and that's something really interesting too. We didn't have a catastrophic event that typically that's happened like pretty much at the end of every other bubble. There's no major bad news. The bubble literally the bull run ran out of steam. It just got exhausted, and we started breaking down. So as far as downside here, again, we peaked at about 115 billion. I'd guess the downside is around 50 or 60 billion. Like those are the low points. It's possible we dip slightly below that, but in general, I think that is the maximum downside. And I would say on that note too, a lot of the damage is already done, especially again to the major ones like Ethereum. I don't see too much more downside there. I think Ethereum at $150 or so would be incredibly cheap. $150 to $200 would be cheap. So I'm going to give you guys a little more feedback and some things to look at here. So I will say to do some analysis here, I'd say Monero and Ethereum and some of these stronger ones again are well positioned. Like these are safer bets in a bear market. So just to show you guys, so here are the amount sent in US dollars. And if you look here on Ethereum, before this bubble started and before the bull run really took off, Ethereum only had 10 or $20 million worth of transactions per day compared to Bitcoin's 1 or 2 billion. But because Bitcoin's blocks are full, a lot of users have really migrated to Ethereum. And now we can see Ethereum is hitting 2 to 3 billion of transactions per day, or sometimes even close to Bitcoin's transaction volume. So I think Ethereum is quite strong. That volume of transactions is 50 to 100 times of what it was back then. And back then Ethereum was $13 or so, and now it's $211. So that's why I'm saying $150 price seems pretty reasonable for Ethereum now. I'd say that $150 price for Ethereum would actually be a pretty good fair price, perhaps even cheap. So, and then you can see the Reddit growth too. Before this bubble started, about 25,000 users on Reddit, and now Ethereum has about 90,000. So that's about 3 to 4 times growth in Reddit community size. Monero is an interesting one too, because Monero really didn't do much in this bubble. It only increased about 3 times in price, but the community doubled in size in Reddit. So that's why I think, Ethereum, Monero are some of the safer bets. I'd say Dash has a limited downside too. So just so you guys see that. Now here's an important point. These are the stronger ones I'm mentioning here. The more speculative ones, the ones with lower market cap, got hit a lot harder, and that includes the likes of some of them that I like, which include Ardor and Ubiq. Again, Ardor is down to a third of its peak price. It was 30 cents, now 10 cents. Ubiq is just about the same, peaked at around 270 something, is now about $1. So these ones got hit really hard just by this downturn. So I'm going to tell you my strategy there, kind of going forward. And it's unfortunate because I like both these cryptocurrencies. Ardor is actually launching in just the next couple months, and I'm really interested to see that. It's just poor timing because now it's a bear market. And then Ubiq I really like too. So, but I would say as a recommendation is go through all the cryptocurrencies you have in your portfolio and make a list of them and list them by the least risky to the most risky. And I'd say, Ethereum should probably be among the top of the least risky, at least in my perspective. That one has less risk. There's less downside. But with those more risky ones, I'd say those are ones where you may want to consider taking some profit out of, or moving some money out of it. Because when it's a bear market like this, it's those ones that are going to get hit harder. And that's what we've seen happen too already. And I know the prices are not as high as they peaked at. Again, it's tough, it's rough, that Ardor and Ubiq are both a third of the price they peaked at, but you have to have the expectation of yourself. You can't expect to get out at the highest price point. So just be fair to yourself in that. My perspective is I want to wait for this bear run to kind of run its course. I want to see the market stabilize and even start going back up, and then I'd be interested to move capital back into those. Just my perspective. And just so you guys know, a really good tool here is USDT, and I'd say be careful of this because it's still, it's not the US dollar, right? There were some issues with it in the past. Hopefully it's fine. It's generally okay, but it's tethered to the dollar or very close to the dollar. So you can go on an exchange like Poloniex and move to the US dollar. And just so you guys know, I'm keeping the vast majority of my portfolio. I didn't move much, I'd say just 15 or 20% or so, just because I want to protect some of my capital going into this bear market, while my stronger cryptocurrencies like Ethereum, again, Monero, Dash, I don't mind keeping those at all. In fact, there's no way in hell I would be selling those. All right, so that's the general direction of things. Just to add to, if you guys wanted to enter the market, again, this is just my perspective. Do whatever you want, but I'd say I'd wait until the market stabilizes. Give it a few weeks to see where we're at. It may take a few months, and when you see the market stabilize, and then even start going up, that would be a good time to enter with capital if you guys are thinking to do that. So that's the gist of it. We've gone over where the market's at, kind of some good strategies there. Let's talk about the future so we know what's coming up on the horizon. And I'd say the really big things there are the user-activated soft fork and SegWit. So we're just going to discuss those briefly here as well. So the user-activated soft fork is set to happen on August 1st. I don't personally think this is going to be successful, and I think it's going to cause a little bit of panic in Bitcoin. That is why I don't want to hold Bitcoin right now. So that's just 2 weeks away. So we'll see. I think we'll see the market kind of start reacting to that, especially as we get closer to it. So after that comes and goes, I don't think that will succeed. But then it does look like SegWit will succeed, and that's with the SegWit 2X. And this is kind of a timeline. This is from Jimmy Song, and I'm not sure if this is exactly correct, so just take it with a grain of salt. I've heard some kind of mixed things on different timelines, but it looks like SegWit should kick in around, let's see, August 23rd. This is when we can expect SegWit to activate. That can be positive news for Bitcoin. And November 18th, this is around when we could expect SegWit 2X to hard fork to 2 megabyte blocks. And if Bitcoin does get 2 megabyte blocks, I think that's very strong for the cryptocurrency market as a whole. And that could actually lead us into an end of the year rally. So that's kind of my perspective on the market. Again, I think it's possible that we have an end of the year rally, especially if this happens. If Bitcoin goes up, I see it taking the market up with it. So yeah, that's it for the video, guys. Hopefully you guys like it. Hopefully it helped you. Give it a thumbs up if you do like it. Subscribe if you haven't yet. Let me know what you guys think, and I wish you guys the best, and I'll see you on the next one.